Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Greene shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for showing up for another episode of Zen and the Art of Real Estate Investing. Our guest today is Joe Rinderknecht of Cowboy Capital and Upgrade Capital's partner. Joe is a real estate syndicator, a multifamily fund manager, philanthropist, family man. He's not your average Joe. We go all through it, how he went from ranching to real estate right now. This is episode 302 of Zen and the Art of Real Estate Investing with my guest, Joe Rinderknecht. Joe is the founder of Cowboy Capital, a real estate investment firm specialized in acquiring and operating value-add apartment buildings under 100 units. He has nearly a decade of experience in commercial real estate, has owned or invested in over 1,000 apartment units across Montana, Idaho, Utah, Texas, and Ohio. And honestly, whenever I read the bio, it's always more because the bios are always a little back. Joe, welcome to the show.
Yeah, thanks, Jonathan. Excited to be here and excited to have some fun.
Yeah, me too. I want to start where you started because I think it's interesting because you started with a mentor in multifamily, but really seller finance focused. How was it learning to start with seller finance? Because I feel like that's what a lot of people want to start with because they don't have the capital to start.
Yeah, I think seller finance was the best thing for me to get into initially because, kind of my background, ranching, construction. It's like I had everything kind of against me, high barriers to entry, not a lot of capital, not a lot of experience in the industry, no corporate experience anyway, right? Zero.
Yeah, that's really different though. I'm glad you brought that up because we do talk to a lot of people who come out of heavy finance or something. And then this is definitely a different way in. So yeah, let's keep going.
Yeah. So I joined a mentorship program. His name is Jeff Rappaport, Beyond Wholesaling, I believe was the company back then. And not wholesaling, but seller financing. We were finding multifamily to wholesale using seller financing. And it was perfect because, like I said, high barriers to entry. I had no credibility, no credit.
Yeah.
Couldn't go get a loan. And so all I had, right, was my resourcefulness. And seller financing is one of those strategies where you have to be resourceful and, negotiating a win-win situation with the seller. And it really teaches you, really cut my teeth on the art of negotiation and sales too. Because I've never had a sales job, never gone door to door. It's just a conversation with you and I and figuring out, okay, what's best case scenario for you? What's most important for you, and then I'll tell you what's most important for me, and we'll find a happy medium, and that was really good. That's actually how I ended up buying my first actual investment property that I held for 7 years was with seller financing or subject to. So.
It's interesting, though, because a lot of people who get into wholesaling first obviously do it in traditional single family because that's just more accessible. Why did you start in multifamily? Was that what everybody in there was doing, or did you just decide you'd like to go bigger?
I just decided to go multifamily. There is a lot of stories, right, of people going from single family to, doing fix and flips to wholesaling to smaller multifamily buy and hold to bigger multifamily. And I don't know how it happened, but I've only ever done multifamily. I mean, just this year I bought my first single family, that I live in.
That's backward of a lot of people. But I think it's really smart because I think if you look at what's out there, there's just way more single family homes. So when you're talking apartments, depending on the size and the scale of it, it's a smaller pond, so you're going to have to make less calls, but you have to build better relationships, which is part of what you learn doing seller finance. Like, just how are you going to nurture the relationship? And as you said, hey, what's in it for me? What's in it for you? Can we meet in the middle somewhere?
Yeah. Yeah. And maybe really make sure that the sellers feel like they're winning big time,
Yeah. Yeah. Or yeah,
'Cause we're
absolutely. And
dealing with a lot of mom and pops, right? And a lot of the time they're not sophisticated. Some of them definitely are, but like if you can make sure that they feel like they really won in the transaction, then, you know, yeah, I've actually got a really good story about that if you want me to
let's
tell it
do
really
it.
quickly.
Yeah.
I cold called a seller of a 20-plex in Logan, Utah when I was getting started, right? And we never got the deal done, but I it's really comical because I offered on it multiple times, like 4 or 5 different times through the years,
Yeah.
right? Trying to pitch master lease and, seller financing, or like, just let me manage it, not even master lease, just let me manage it and
Yeah.
show you what I can do. And I am very pleasantly persistent. And what's really cool is I never bought that deal, but I built so much trust with them over the last like 7 years that they invested $1.1 million with me on my last deal in Texas that we
Wow.
2 months ago.
Yeah.
Right. And it's just
That's
like,
awesome.
it started, just me cold calling somebody and kind of bugging them over the years.
Yeah. Well, I mean, another good point for people who are newer to the business, like, don't give up on those people. You don't have to do a deal with everyone for them to be worthwhile later. And then maybe like the tides turn and they switch and they say, wow, you've done a lot. We never connected on our deal. I think that's a great story and good hope for people to get started, and maybe a different way for people to think who almost all of the wholesale courses and guru things are all built for a single family just because there's a glut of opportunity there. But
Yeah.
I really like the idea of doing it for multifamily because there's just not going to be a lot of people. You're not showing up at a 20-plex and there's 9 wholesalers are there like there is for, you show up, you think you're the only appointment on a single family. You probably don't even know this. You show up and there's like 9 wholesalers and they're like, why did I even come here? This is just like a low ball fest. Everyone's going to go low and then go a little bit higher and see who wins.
Yeah. I've never had to deal with that.
Well, see, we're
Thank
just telling
heavens.
people some other options right now. So, well, let's talk about your first deal. Obviously, you got some experience wholesaling. What led to your first multifamily deal?
Oh man. Overcoming a lot of fear. So yeah, so the story there is, I let's see, what's the best way to start this? So it was 2017, and so I had bought a duplex in 2016 that we house hacked, and like I was really getting interested in multifamily with the wholesale stuff. I'm like, hey, I got to go buy something for myself now because I'm starting to see the power
Yeah.
of like what multifamily can do, right? More than say like the single family. And so I started connecting with local brokers. And there's this one broker who would send out like a newsletter every week showing the properties that are going into foreclosure. And they on the list they had a duplex that was going to auction the next day. But I knew the area really well, and I knew that like the marketing that they had was wrong. It was actually a fourplex because it was like townhome style,
Yeah. Yeah.
2 units in the front, 2 units in the back, but it just looked like 2 units in the front. And so I talked to the broker, and he's like, you know what, there's no way that we can postpone that auction tomorrow. So if you want to try and do something, go for it. So I did. I was like, okay, let's go. And so I drove to the property, scared out of my mind, didn't know what to say. And this was actually even before I did a lot of wholesaling. I did
Mhm.
it like one maybe. Um, so I went and like found out that the guy lived in the unit. I went and knocked on his door, trying to figure out how to solve his problem, not having any idea how.
Yeah.
Um, Knocked on the door. I was so grateful. He did not answer. So I wrote a note, taped it to his door, drove home. And like an hour later, he calls me and says, hey, I actually had no idea my property was going to auction. Can you help me? And this guy, I'll tell his story really quickly.
Yeah.
His wife, like 12 months prior, had come out that she was not straight.
Yeah.
And it wrecked his world. And he just kind of gave up on life.
Yeah.
Right. He had so many notices in his mailbox, but his mailbox
He had
was
no idea. Yeah, he was checked
no
out.
idea.
Yeah.
He just didn't care. Anyways, and so when he said, "Okay, he's like, "Okay, let's see what we can do to postpone the auction." And it was like 8 o'clock the next morning, and now it's like 5 p.m. the day before.
Yeah.
So I call my mentor, Jeff Rappaport, and I say, "Jeff, what are the chances that we can postpone this auction?" And I remember like it was yesterday, standing there on the curb, and he's like, "You've got like a 1% chance." And so if you think of like the Dumb and Dumber show, when she like tells him like she has like 1 in a million chance
Yeah.
of hooking
So
up.
there's a chance.
Well,
Yeah.
there's a chance, and I
Yeah.
took that chance, man.
Yeah.
And I stayed up all night long and I studied subject to and how to postpone a sale. And it was like, you got to have the property under contract to postpone the sale. And so I studied, okay, what's subject to? And, cause he's like, okay, the best way to do it is to do subject to, get it under contract. So I studied all night long.
Yeah.
And I got up at like 5 a.m. Actually, I didn't sleep. I called him at like 5 and said, "Hey, this is what I've learned. This is what we've got to do." And he's like, "I've been doing some research myself, and I think I'm just going to file for bankruptcy." And I'm like, "Oh, no,
Yeah.
that's,
You're
that's
like, I
the
just stayed up
worst.
all night. Yeah.
That's the worst thing that you could do."
Yeah, right. You're ruining your credit.
I mean,
Yeah.
I kind of knew, right? And he wouldn't sign the contract. And I'm just like, gosh, dang it. Like, there's got to be another way. And so I just kind of took the initiative. I called the auction company and said, "Listen, I'm working with Matt," who's the seller's name. "I'm
Yeah.
working with Matt. We're going to get a contract signed." He told him the whole situation. He had no idea, blah, 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 blah. "Is there any way that we can postpone the sale?" And she's like, "You know what? Nobody's actually shown up to buy it, because like it was marketed as a duplex for like 270,000, and that was a lot for a
Right,
duplex."
right. It was
And some people,
overpriced
I
for
think,
yeah.
probably thought that he had like like a second and a third on it, and so it's
Right,
like
right.
a lot of leverage. And so she's like, "Nobody actually showed up, so we're gonna postpone it." I'm like, "Oh my gosh, thank you." And to make a longer story short, it took us like another 45 days to actually like get it under contract and to get it bought, because he was on such an emotional roller
Yeah.
coaster that it took a lot of work. But we finally got it, and we did it subject to the mortgage. And this story is really, really awesome. Um, Not just the financial gain, but what happened to him as well. And I'll get to that really quickly.
Yeah.
But he did the deal with us subject to the mortgage, where we paid, on his payment. He had actually done a loan modification like 10 months prior. So he had a second position, like HUD, is like 34 grand or something, had no payments or anything. Um, and, and he just gave us, the keys.
Yeah.
We brought his loan current. We didn't pay him a dime. He walked away. And, we put about
Right,
13.
and he saved his credit.
We saved his credit. Yes. And we saved him being able, like, from the bankruptcy, which he
Yeah.
tried to do multiple times. And like that property made, so we sold it last year. We held it for 7 years. We made about 200,000 in cash flow over those 7 years. We bought it for 250. We sold it for 700
Wow.
and owed just under 200,000. So we netted about 700,000 between my partner and I over 7 years, which is
Awesome.
unheard of for a fourplex. That's not even the best part. Like I kept in touch with Matt over the years because I needed his power of attorney. We had
Yeah,
power
that's
of
what I
attorney
thought
for,
you were
like,
going on. Yeah.
insurance in his mortgage so that I could act in his behalf.
Yeah.
He calls me the day after I sold the property, and he's like, "Joe, I have a problem. I need your help. I'm like, okay, what's up? He's like, as you know, but like he had turned his life around. He got remarried, had a couple kids, and he's like, for the first time in 7 years, I'm able to go and get a mortgage. And there's this house that I want to buy. And he's like, they won't let me get it because the mortgage on the fourplex is clouding title. And he's like, are you guys planning on selling that, refinancing that? Like, what's your plan? And I'm like, Matt, we sold it
Oh
yesterday.
my God, that's crazy
And
coincidence. Yeah.
he's like, are you kidding me? And I'm like, he's like, no. And he's like, can you call the agent and tell her that? And I'm like, yeah. So I called her and she's like, you don't know how much this like means to Matt and his
Oh, that's
family
awesome.
that, we were able to help him build his credit up over those 7 years of, paid on time
Yeah.
payments to where he completely turned his life around for the better. And it's just a crazy coincidence, just like you said, that we closed a day before he was trying
Yeah.
to get, it was like one of those like weird red flags that popped up right at the very end of
Yeah.
signing the loan. And it was a blessing. It was really, really cool.
Yeah, I mean, what a story and what a great indication for people who are newer to the game that you can have a difference. Like you can actually make a difference. I grew up with a dad who was a landlord, so I kind of knew tenants and I understood the game. But I think for new people, they watch a lot of YouTube or they watch TikTok and they think it's just like a numbers game and a spreadsheet crunch. But you can, in multifamily or any type of rental situation, and really any deal, you can change somebody's life by actually paying attention, like you said, and how you learn, seeing what they need and making it a win-win. Like, I think that people try to grease too much. It's pretty obvious if you're working pre-foreclosure, the only way to get it is to pay more than they owe. But if you don't even know that, you're already doing a terrible job. They owe 220 and you offer 180. Well, how's that going to work? That's just not going to work.
Yeah. Short sales haven't been a thing for a little while.
Yeah, I know. I miss them. Although I hated waiting, and then half the time they fail anyway.
Yeah.
But yeah, I mean, what a great first deal, and look at all you made on that, and that's from walking up to knock on the door and being happy that they weren't there. So
Yeah.
like, this is really what real estate investing's about, is being slowly persistent and conquering your fears. Obviously, you did, and then grew from there. What do you like now about staying under 100 units? Why is that so important to you at Cowboy Capital?
I think just because like we found like that was our bread and butter. Like we really knew how to operate them. It's easier dealing with like property management and
Yeah.
construction. And I think the other thing too is like I hadn't ever done anything smaller than 100 units, but we just broke that barrier too. We bought 292 units in San Marcos, Texas, a month and a
Oh,
half
okay.
ago. And so um, like we figured out that both my partner and I, he's been doing this for about a decade as well, and everything that he's done has been 10 plex to
Yeah.
100, or the biggest one prior was 111 units. And we just got really, really good at, what we were good at with those properties. And our sellers are largely mom and pop owners that have owned it for 10 to 20 years. And so it's like we figured out what we were good at and we honed in on that. And especially in our markets too, because
Yeah.
Montana, Idaho, and Utah, I'm in Eastern Idaho. I can hit all my properties, Utah, Montana, Idaho, in 4 hours,
Right.
right? So kind of give us a competitive advantage because in Utah, like in these markets, like you're dealing with a higher price per unit and you're going to find probably better deals in that 30 to 80 unit range that are more mom and pop.
Yeah.
And mostly the reason why we haven't really dealt a lot in 100 plus is, more institutional level groups and
Yep.
investors are going after your core, even your, value add deals. And so it's just like the barrier to entry were really high back then,
Yeah.
not as high because now we can more compete with some of these bigger boys because we built that track record of operating these mid-sized apartment complexes. So we're slowly getting up to the 100 to 300 unit deals and becoming more comfortable and learning how to operate a much larger site.
Yeah. And what's your buy box? Are you looking class A, class B? Or are you doing upgrades from B to C or C to B or what's your kind of favorite as part of it? Seems like you have a set strategy. So in
Yeah.
terms of the neighborhood, even though I think those are kind of subjective,
Yeah.
what have you gone with?
Yeah. So all the deals that we bought the last 12 months, even 18 months, like what my partner bought, they're 1980s vintage and newer, probably kind of like C plus, to B, like you
Yeah.
said. They're not like highly distressed, but there's a fair amount that not a lot of other people, we're not competing with a ton of other people because there's just still enough of a value add component
Yeah.
that it's more than what a lot of people are used to. Um, and yeah, like the mom and pop shops, people that have really poor financials and you're running off of a
Yeah.
rental.
Yeah. They
Uh,
pull out a notebook with a spiral notebook with a pen and you're like, it's 2025, right? Whatever, you
we
know?
love those deals,
Yeah,
right?
no, that's great. Yeah.
You you make the most opportunities out of the hairiest kind of stuff. You know,
Yeah.
the barriers to entry are ever greater. The hairier it is, or the worse the financials are, and so
Yeah. Are you doing like full value adds or are you taking on and just kind of seeing what the tenancy is? Because I think a C plus to B, sometimes you're going to run through the tenancy, see what happens. Sometimes you have good steady rent for a while and you can kind of let it ride until people move out and then renovate at a time. What's been your strategy over the years on
yeah,
that?
I think it really depends on the market too and where your rents are, right? But for again, so we bought 4 deals the last 12 months, and
That's good in the last 4 months. A lot of people took more of a break.
yeah. I mean, we've been really fortunate. Like I said, we built a lot of credibility with brokers here locally, and had deals sent to us really before they hit the market. And so yeah, we bought a 54 unit in Missoula, Montana, a 25 unit in Missoula, Montana. That was a condo deal, a 48 unit in Boise, Idaho, and then 292 units in San Marcos.
Yeah.
On all of those projects, we we do a lot of like capex exterior work, so roof, siding, parking lot. Like
Yeah.
on Texas deal, we're doing like $1.1 million worth of work right now over a $2.3 million budget, and that's siding, painting.
Yeah. Yeah. Big change on curb appeal, bring higher rent. Yeah.
Uh, yeah, the big things like with so the stuff that's more local, we're buying stuff that. So I'll give it for example again. We bought 54 units, Missoula, Montana, September of 2024. That deal came on the market, hit LoopNet, and we ended up buying that deal for 6.8 million, which is like 126 a unit, which is crazy low for that area.
Yeah.
But we competed because like it was a 3.8 cap on actuals, right?
Okay.
And that's a really low cap, and so that scared a lot of people away,
Yeah.
right? Um, but the average rents, they were studio 1 bed, 2 bed. The average rents were like 785, and today our average is like 1,400,
Wow. Yeah.
and an average of a $70 utility chargeback. Like we knew that market really well. And so when we bought it from it was built in 98, and we bought it from the original builder who built it. And, his basis had to be a couple million. Like he probably
Yeah. Yeah.
built it for a couple million back in 98, and he's a builder. And so he probably even got a better price because he has,
Yeah. Yeah.
pricing. Anyway, so when we went in, like 90% of all the units were month to month. And so when we buy a deal, we like to implement our business plan day one, right? And
Yeah.
that's usually like we kind of follow a similar strategy as most, where we like to renovate 50% of the units. But when we bought the property, we knew that there was a huge delta between where the rents are now and where they can go based on market. And so when we bought it, we did a $385 rental increase, blanket increase on every single unit, right? And we had budgeted that we would have like a 60% mass exodus of
Yeah.
tenants.
Yeah. But
60%.
that's what you want so you can renovate. Yeah.
Exactly. But what was surprising was when we implemented that, only 40% vacated and 60%, we were able to retain, which
Yeah.
we're ecstatic for, right? And like, we're really good at construction and being resourceful and getting really the best pricing. So we renovated 20 units at once. So we bought it in September,
Yeah.
20 units went vacant December 1st. And it was perfect timing because up there in Missoula, there's not a lot of work in the winter months. So we were able to get
Yeah.
our like property management maintenance team to do a lot of the odds and ends. And the other thing we were able to do is like using local labor for cabinets and flooring and paint and all that would have cost us about 20,000 a unit to do a full renovation. We were able to bring our relationships from Salt Lake, and we did it for 13,000 a unit. We brought nets and paint and flooring from our subs in Salt Lake, and we're able to get a much better price, right? And now, what's crazy is like that our property is on the market today for 11.8 million.
Wow, that's crazy. Hey, it's Jonathan. I hope you're enjoying this episode with Joe Rinderknecht. And if you like podcasting, I want to give you a brief reminder. How many podcasts do you listen to that don't have ads? Chalk this one up, because we're over 300 episodes and I've never run a paid ad, and I have no plans to. I'd love to tell you to subscribe and also to follow the podcast and leave a review, but the truth is, you're going to do that if you feel like it. It's really not a big deal to me because I'm not trying to sell my podcast off to Spotify or create vanity metrics that make it look better than it is. Because it's great because you listen. Doesn't matter how many of you, and there's a lot of them, and I appreciate every single one. So when you talk about podcasts, think about how many you listen to that are focused directly on the guest and no ads. Let's get back to Joe. But that goes, I mean, you knew something about it that other people couldn't see, and that's knowing your market. And that's why, in my opinion, real estate's local. Obviously, you have like kind of a 4-hour buy box, but that's something that you're comfortable with. Those markets kind of react similarly. But that's a huge thing that you can change. When you finish those 20 units, did you go and offer them to current residents to upgrade into those units, or just put them on the market? Because I know people have different opinions on what they want to do then.
Yeah, we put them on the market. Not a lot of the tenants wanted to
because they accepted the 385, so that's like they're good and they're comfortable with what they have.
Yeah. And I mean, this property just continues to surprise the crap out of us because, when the tenants renewed in December, we did a bunch of like 4, 5, 6, 7 month leases so that they would end in the hot season and not in December again.
Yeah, right.
And, we have been able to keep, out of the 54 units, we still have 20 or 19 of the original tenants from when we bought it. So our retention rate, and they've gone through 2, maybe 3 like renewals, right? And we've been able to have a really strong retention, which really shows the market rents and just like where we're at. But the other thing too is we were expecting a lot of delinquency when, like December, January hit, because of that $385 increase, know, and it was less than 5%. We've never been over 5% in delinquency since we own this property.
I've always said that people know when they have a good deal. So then when you come in and raise rents and they know they were like so crazily below market rent, they kind of get it, because what if they go back out to look for something, they're not going to get that extra $400. They're going to have to spend more. So they're being smart. They understand. So are those 19 units still like the original? They're not renovated?
They're all classic.
Yeah. And then if they leave, then you just turn those over, right?
Yeah. And what we've been doing, because we've had 8 units, 9 units turn. And so we'll do what we call a classic turn. We'll go in and replace all of the electrical, the receptacles, all the lighting fixtures, the faucets, flooring if we need to, paint if we need to, but to just like really clean it up. And so like the tenants who are looking at, moving there, they have like a fully renovated option and they have a classic turn. So like we can kind of hit two
Yeah.
different pricing metrics within the market. So,
Yeah.
and that really helps us keep our occupancy high.
Yeah. I think maybe novices wouldn't expect that you can have a 54 unit that has basically two different kinds of units, old school 1990 and then your kind of new renovation. But that's really how it works, because you don't buy a 54 unit, kick everyone out and do a renovation and then let them move back in. I
Correct.
think but really people who haven't operationalized, maybe they just don't think about this stuff.
Yep. I mean, it's a lot of learning as you're doing it, but it's really worked out. And we're implementing a lot of that same stuff, like on our Boise deal. And Texas is a bit of a different market, so we've got to tread lightly a little bit more with that because there's higher delinquency and higher vacancy, and so it's a matter of just kind of turning units and getting occupancy up before we start renovating a lot. But it's fairly similar business model, though.
Yeah. But you do have to learn, and, geographically, you have to learn the market by kind of testing stuff out. You see, like you put the rent up and then nothing happens. You're like, okay, that was too high. You know?
Yeah.
Yeah, it is really learning on the fly, because you can't take exactly what you do in Boise and then put it in San Marcos. It's just going to be, you have to test it out, see what's going to be different, and then learn along the way.
Yep. Exactly.
Yeah, how much has your risk tolerance changed? Because I know, because I grew up in it, my risk tolerance has always been high, but I like educated risk. But when you're new, sometimes you're more risky because you don't know. But then you have a different type of risk later when you have a lot more education. As you were saying with that deal, you can buy something at a 3.8 cap where everyone else is like, are you kidding? No one's going to buy this, but you knew something that they didn't. How has that risk tolerance changed over time?
Yeah. Like you said at the beginning, I didn't have anything to lose. So,
Right. And nothing to compare it to,
yeah,
right?
I was just going for it, Um, I mean, I got into some stuff where it's like I never should have done it, but looking back is the best decision I ever
Yeah.
made. But if I think about like my risk tolerance now, um, I, I kind of, one of the last podcasts I was on, I was like, I feel like I have a really high tolerance level. And then I really took a step back and thought about it. I'm like, hey, I feel like I'm actually a little bit more conservative, but my business partner, Levi,
Yeah.
is a lot more
That's good
uh,
balance. Yeah.
risk adverse. So he's done stuff that I never would have done, like this Montana deal. He put up like $50,000. He put on our LOI like $50,000 non-refundable day one, released to the seller. Like it's gone. Like there's
He
no
must
coming
have
back.
really wanted it. Yeah. Yeah,
You
you got
know,
to make it work then.
and so it's like he's done stuff like that, and we've won deals because of it. We haven't lost yet.
Yeah.
Thank heavens. I need to knock on some wood. There's some wood.
Yeah.
But like he'll go and do stuff when I would never have done it. So like another story with this Montana deal, it was a Sunday night, and the seller listed this property and went on an African safari, right? Like the day before.
Perfect timing. Yeah.
And he sent it out like it's like a Tuesday, and on Sunday, like they had a call for offers, right? It was super quick, and they're like, why the freak did you just fly to Africa?
Yeah.
Anyways, so we're talking to him late Sunday night. He verbally accepts our offer, and then our broker is like, okay, we'll get you the PSA tomorrow. Tomorrow comes, and Levi and I are like, we haven't seen anything.
Yeah.
So of
Yeah.
course we're thinking the worst, right? Like, and the worst happened, which was a local buyer, a local owner who the seller knew, came back and offered 210,000 higher, 7.1.
Yeah.
And he was really considering taking it. And the broker's like, do you want to increase your price? And in my mind, I'm like, okay, we came up on our price from 6.5 to 6.8. It still really works. Like, let's do it. Let's go to 7.1. And Levi's like, nah, we're not doing that. And I'm like, I really want this freaking
Yeah.
deal,
Yeah.
man. Like,
Yeah.
what are you doing? He's like, we just sometimes got to be willing to let it go and to
Yeah.
call our bluff, right? And so we got back on the phone with the broker and said, listen, we want the seller, like both my partner and I grew up ranching, farming, and the number one thing we're taught is your handshake is your word and your word is your bond. And that's all you really have. And that's your reputation is your word and executing and doing what you say you're going to do. So we threw it back on the seller because he was selling this property to go buy a ranch. We're like, listen, we want you to keep
Ooh,
your
that's nice tie-in. Yeah.
because you told us verbally over the phone that you would do this deal with us. Like, we understand 210K is a lot of money and like it's a lot, right? For anybody. But we want you to keep to your word, and our word to you is we will not renegotiate. For those of you who don't know, we will not renegotiate. Like, that's cardinal sin in this game. And we will close when we say we're going to close, and we'll do everything. And he came back and said, we like your attitude, and I'll do the deal with you. Like, send that freaking contract right now.
Yeah.
And so it's something like the risk tolerance, going back to the question, is like, I was ready to do it. And he's like, you know what? Let's just see what we can do to get this. And we increased earnest money another 25K. So 75K non-refundable released to him the second we signed that contract, and we still had 90 days to close. And so he has helped me with my risk tolerance.
Yeah, even when it makes you nervous. I mean, it kind of ties you to the deal. It's like the burning the boats thing. Well, I'm going all in, so we're going to have to figure out a way to make it work. But when you understand the asset and you have some experience, you have the ability to take that. I like that move, though. I've kind of always been a hardcore negotiator. I was a trial attorney, so I actually used to take it too far, in real estate, because I was just so used to negotiating all day. And then I started to pump the brakes and start to think about like, okay, you can walk away, but you can also walk away strong and say, hey, we had a deal. I'm sticking to the deal. That's it. And, if they don't come back, they probably going to have some weird karma. A lot of those deals where someone bumps you out of the winning spot, a lot of them fail and then they come back. The thing with me is I won't give them what I said I was going to give them before, because now they already screwed me. So, I mean, I'm tough. It's just like, you're just going to get a penalty and that's going to be it. But, again, really depends on the asset and how much you want it and if there's other fish in the sea for it. But like you said, your acquisition strategy is putting you in a spot where there's not that many people that you're up against on these deals. So you kind of know like, okay, it's 3, on just residential home sales, sometimes here where I am, you can have 10, 20 offers and it's just, a complete free for all. That's why I think, commercial is very relationship based. You said before, a lot of the brokers will bring you the deals before. And I think that's very common across multifamily. And again, something that maybe newer people don't get. Once you've built the reputation, commercial real estate's not built to go on Zillow or Crexy. It goes on there after all of the people they know have passed, right?
Yep. I completely agree with you on that. I think like the relationship, like it's probably more prominent in my mind than maybe even the single family game. But
yeah, definitely.
Like the Boise deal, like my partner Levi, he's the deal junkie. He's the one that's built all the broker relationships. And so this guy was like, hey, I've been seeing what you guys are doing. I think this deal's perfect for you. I think you should get it. And we submitted an offer, that day. And it was between our company and another company out of Oregon, and the seller, another mom and pop owner. They'd owned it for 10 years. Dad had died. So as the kid selling it, and they wanted to do a buyer seller interview. And what was really cool was we were in Montana at our property, and we were on the phone with them for like an hour. And the son that we were talking to, Scott, he had a construction background. So, he and I hit it off just talking about construction, just really building that rapport, right? And the broker came back and said, you guys were on with over an hour, whereas the other buyer was on for 20, 30 minutes and was just very cut and dry detailed, only about the deal, nothing about personal or anything. So he's like, I feel like you'll, do really well because of that. Yeah. And then I think this is something really cool I've never seen other people do. But we knew that in this Boise deal, it had the same cabinets as the cabinets that we were replacing in Montana. And so we're like, how cool would it be to take a video? And we did this. We took a video and said, hey, we did just a selfie. Hey, Scott, this is Joe and Levi. I want to put a face to the name and the voice. we want to show you this project we're showing North Russell, our Montana project. And we realized like your units are the same as our units. Let us show you, so we went in classic unit. Look, this is a project. We're getting ready to renovate. Let's show you what we've done to it. And we were in the middle of installing cabinets, right? So we went and showed like, this is what we're doing, right? Because a seller, that's a mom and pop, what do they want? Speed, certainty of execution, record, right?
You're proving you're already doing what you're going to do. Yeah.
We built a relationship through the call. We showed the proof in the pudding of what we are doing right now, this second, right? And that ultimately won us the deal.
Yeah, I think everybody can learn a lot from that. In a lot of my discussions with off market over the years, I would ask questions and they'd be like, "Why are you asking me that?" Because it would be a personal question and not about the real estate. And I'm like, once you try to get to know someone, you're building a background for later success and you're just being a human. I think people forget because again, maybe they take a course and it's so like, hey, these are your 5 steps to success. And none of them involve just like being a good human being by just like talking to someone. Especially if it's a distressed asset, it's not just a quick, the craziest thing for me ever is when people call on pre-foreclosures and they immediately bring up that it's a pre-foreclosure and then tell them they'll give them a cash offer. It's like, they're in pre-foreclosure. There's a problem in their life. Just like you said, that first guy didn't even read his mail for a year, which also sounds great to me because I hate the mail. But like things happen in people's lives and you have to be willing to kind of go down the rabbit hole in order to eventually come out with the deal. And worst case, maybe you just help them or you're just an ear for them for the time. And the deal doesn't have to happen. As you said, 7 years later, they may come back and invest $1 million into your deal. What a great story.
Yeah, it's crazy. Yeah.
Yeah. What do you think ranching taught you in terms of acquiring multifamily? Because I know they're different businesses, but like you said, ranching is a very handshake business. It's a very honorable business. And it's something that I think other people in these 4 states that you work in can understand, even if they're not in the business.
Yeah. I actually just put a post on LinkedIn about this about, I don't know, 9 days ago. I'm doing Yona Wies's like LinkedIn.
Yeah. He has a lot of challenges. It's hard to keep up.
Yeah. So like the day one was like talking about, because like I love my partner. He's the deal junkie, underwriting, lender, banks. I like asset management. Crazy enough, capital raising and asset management. So in that post, like I talked about how much ranching is just like asset management, right? So like when you're ranching, I learned that like if you've got to take care of your cattle, you've got to feed them and water them and care for them if they're sick. It doesn't matter if it's sunshiny, if it's hailing, if you're sick or on your deathbed.
Yeah,
it has to happen, right? Because your lifestyle and your way of life depends on those cows being fed and watered and cared for, no matter an act of God going on or whatever it is, right? And so I liken that to asset management, buying, the ranch and the equipment and the cows is sexy, like doing a multifamily deal, buying the deal and raising the capital. It's sexy, right? It's all the social media. Yeah. But like nobody, like asset management typically is the grind that is not sexy. But
you didn't want to make a post about unplugging a toilet on Thanksgiving because that's what it's really about, right?
Oh, dude, I've got better stories than that.
Yeah. I mean, that's coming up. I mean, you always get a call on Thanksgiving. You have the more units you have, but like you said, that is very important because just like you were saying with the livestock and the cows, like you can't neglect that because your whole building is at risk. If you do, if that toilet overflows, then it goes into the unit downstairs, then it goes next door, then you don't get there for a while. Now you have a mold problem. Like everyone's complaining. Now other people heard about it. It really can be a slippery slope.
Oh, yeah.
And it's good that you guys have different things that you like. And I think that's kind of the value of a great partnership. If you're both the deal junkies, you'd be just spinning off deals and the management would be terrible.
Yeah. Well, and the benefit is we can both do each other's job, right?
Yeah.
We just have our path of genius or however you say that, right? Like we both have kind of our lane that we really enjoy and we kind of go all in on that. But
Are
Yeah.
there any other asset classes that you've been interested in? You said you just bought your first single family, but have you ever thought about any other commercial assets? Or are you really happy with the multi? Obviously, you went up in a unit count now by a lot to 292.
Yeah. Well, in the single families, we actually bought this house single seller finance, funny enough.
Oh, awesome.
Yeah.
Yeah, I mean, but you know how that's how you started, and I think people I mean, I grew up seller finance. I've sold properties on seller finance just because we knew the tenants, kind of that rent to own situation. So I mean, I think the more old school for me because I've been at it for so long, but for you, the way you get started, you never stop doing seller finance. You always see if it's available. Why
Yep.
not, right?
Yeah. And I couldn't buy a house right now either way. I've been 1099 for so long,
Yeah,
showing no income. It's just like I told my wife, if you want kind of the first stage of our dream house, like I'm not getting a loan. I'm not putting $100,000 to $200,000 down on
yeah,
a house that I could go put into a deal. And it's just crazy how like all of the pieces lined up. And we bought this house. It's a little bit more than we were expecting to get, but 5% down, 5% interest. Interest only payments. So it was
welcome
perfect.
to seller finance.
Yeah, and it was only like $400 higher than what our rent was because we've been renting for the last
Yeah,
like 5 years. Um, but yeah, as far as like other commercial assets, if you want me to go down that path a little
yeah,
bit, uh,
absolutely.
I also have a fund of funds business.
Right.
I had a
That's
deal,
Upgrade Partners Capital.
yeah, UPC fund, Upgrade Partners Capital. Yeah, that was born out of a mastermind in Scottsdale that I was a part of. The mastermind is called Upgrade, and so a couple buddies and I started that company. I'm still kind of I'm two, both of them have kind of moved on. I'm still running it, but I'm very interested in doing more of the fund of funds. I've been looking at like alternate investments,
Yeah.
to help my investors diversify their portfolio. So I've been I haven't been doing as much, but I think in 26 I'll do more. I'd like to learn more about like oil and gas and data centers and
Yeah.
mobile home parks and some of those different asset classes that can give different benefits to an investor than just the depreciation and the cash flow that
Yeah.
kind of your status quo with multifamily. I want to offer something a little bit different, but also my fund of funds can do non asset related stuff too. We can do venture capital.
Right.
I'm actually looking at like a film and entertainment fund that they're getting like 20 per. It's kind of like a debt fund for film
Yeah.
and entertainment that I'm looking at. Another podcast host. It's his fund. I'm trying to remember. I can't remember off the top of my head. But anyway,
Yeah. I've done a lot of fund of fun shows, and they're always really interesting to me in terms of what type of assets they can turn out. Obviously, data centers getting big, energy powers getting big. It's just going to be interesting to see, and that gives you the availability, as you said, to help people diversify. But
yep.
raising money is hard. How over the years have you found and then kept up with finding new people to invest with you?
Oh yeah, it's really been fun. Because as you get started, I have a mentor, Ryan Miller. He says, you have your FFF, friends, family, fools, right? I
Yeah.
think other people say that too, but when you're getting
Nowhere
started,
else to start.
yeah, so uncles, cousins, father-in-law, 50K here, 50K there, 100K, and you just how do you say you just get the money that people are willing to invest as you can.
Yeah.
Um, Again, it goes back to relationships, right? And having that long-term vision of the relationship. Something may not come from the relationship today, but what may happen in a decade or 2 decades from now, like we plan on being in this business for a long time. So, we're building relationships, say with like family offices right now who might
Yeah.
get a $10 million check 10 years from now. Um, and this Texas deal really is a good example of that because, like the $1.1 million, right? The family that I cold called, we had a fund of funds guy bring us $2.3 million. There's a $6 million raise on this
Yeah.
deal. One check, $2.3 million from a fund of funds with a
It's
guy
awesome.
that I met back in 2018 in a real estate community that I paid $20,000 for when I was worse than paycheck to paycheck, going to college, driving
Yeah.
semi full time, and had a 6 month. It was the worst time to do it, but it's like it's paying dividends today,
Yeah.
right? And then
But not if you would have given up, because a lot of people do. They pay something big and then like it doesn't work right away, and they're like, "Well, that class they were wrong. It's not going to work." But most people are just thinking short term. You obviously have a good long term view on what you want to accomplish.
yeah, yeah, definitely. And my wife has not always loved that because like I haven't got paid much money at all in the last decade. That like this last 12 months has been the best year that we've had in the last
Yeah,
decade.
you're like, see, I told you it's coming. Here
I bought
we're
her a
just getting a
house,
little trickle.
bought her a house to say thanks.
Yeah, yeah, that's awesome. Yeah, I think capital raising is always interesting, but it always starts, like you said, we've talked a lot about relationships and building them and then accessing them. I think the worst thing you can do as someone who wants to stay in it long term is only to reach out to people when you need money. If you
Yeah,
don't nurture it in the middle and just,
yeah,
again, like I said, be a human being, check in once in a while just to say hi with no ask, you're not getting that 2.3 later, unless the deal is that much of a screamer, but still they might not trust you the same.
yeah. And the thing that I'll add to that, I mean, it's everything to do with relationships. And another mentor, there's been a pretty good, track record here of like mentor, mentor, mentor.
Yeah.
I've got another mentor. You may have heard of him. His name is Ryan Miller. He runs a capital raising community called Fundraise Capital. Anyways, he teaches like capital raising is all about relationships, reputation, and results,
Yeah.
right? And so a lot of those you don't have as you get started, right? And so you build those over time. And what's really been cool, like these last 12 months, like when I raised capital early on, it's like 50K, 100K deals. And then we bought our Boise deal in June 26th of this year. And we raised 2.8 million from 6 investors. Average
Wow.
check
Yeah.
size, $440,000,
Solid.
right? And then the Texas deal, we raised 6 million with 8 investors, average check somewhere in the $700,000 range,
Yeah.
right?
Awesome.
And in the last 12 months, we've raised 12 million. And if I look at every one of those investors, about 50% of them are return
Yeah.
investors, and the rest are referrals and warm market. Right? None of them are cold, and it's just like
Right.
you got to nurture those relationships. And so it's interesting because I see guys that are very local to me and that are doing a lot of like Facebook ads and trying to get your 50K retail investors. And I'm like, dude, like I have,
Facebook ads aren't even good for like, single family house leads. Want to get 50 grand. I mean, come on, that's crazy.
it sounds like, willingly banging your head against a
Exactly.
wall.
Yeah.
And so it's like right now, our strategy is like we get on multiple calls every single week and nurturing warm relationships, building the relationship, talking to past investors, making sure they're having a good experience, asking them if they know anybody who would
Yeah.
also be interested. So it's like probably for the next year at least, we're just going to go all in on nurturing the warm relationships.
Yeah.
And, we have a couple deals that are turning. And so it's like we're going to continue to have more like returning customers, and so um, that's been a great strategy because it's like we won't do a deal. We will not allow anybody in our deal unless we have a pre-existing, even if they're accredited. We want to have some level of relationship with
Yeah.
them because we don't want a bad investor that's just going to make
Yeah. They ruin everything.
right. And
Yeah.
so
I
it's
agree.
like we have to have like that's a core value of our company is we have to have a relationship with you, even if we need 1 million tomorrow. And unless and you come in cold, we're probably not going to take your 1 million
Yeah.
because we
Yeah.
need to know who you are, where you're getting your money, what are deals you've done, what do you want? Because this may not even be a fit, So it's like even if we may lose the deal and we need 1 million and you're willing to give it to me, unless you come as a referral,
Yeah.
may not take it, right?
Smart
Because
business.
it's not worth that head smashing on the concrete wall.
Yeah, exactly. Yeah, for everybody when it goes haywire. Awesome. Joe, is the best place for people to get in touch with you at cowboycapital.us?
Yep. That's the website. Email is joe@cowboycapital.us. You can hit me up on Instagram and LinkedIn. And again, we've talked about relationships. I love building relationships. So give me a ring.
Yeah. Awesome, man. Well, I really appreciate it. Enjoyed it. I'm glad we got in a little ranching. So it's just a good corollary to it. But yeah, I appreciate you spending the time. Thanks so much.
Yeah, thank you. And appreciate the value you bring to your listeners and enjoy listening to your show.
Thanks. All right. That was Joe Rinderknecht of Cowboy Capital. I'm Jonathan Greene. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on episode 303 of Zen and the Art of Real Estate Investing. And it's Steph Weber of the Weber Co. I bet you're wondering what that co is. Well, Bold Brands Iconic Guest Experiences. They're a creative agency for short-term rental hosts, property management companies, boutique hotels, and micro resorts. They turn ordinary stays into must-visit destination. We go through her journey from fashion influencer to real estate marketing expert, and we talk about her micro resort. Next episode, you're going to love it.